Good morning, everyone. Welcome back to the channel. So today I'm going to be answering another question. I love the questions about DGRO. I know I don't talk about DGRO a whole lot because you know how much I love SCHD. If you do not know that, it's my favorite dividend paying ETF. And I have many videos about SCHD on this channel, so make sure you go back and check those out. But the question was, which one do I like more? SCHD or DGRO. And so I figured let me answer those questions because we do own DGRO. But before I get to there, I saw this morning the stock market. Look at this. The Dow futures are up over 1,000 points. Now I am filming this about 8:21 a.m. Eastern, so the market isn't technically open, but it is like pre-market is open. But you can see right here, Dow futures. Let me just see if I can get rid of this ad. The S&P 500 is up almost 3% pre-market. Look at the NASDAQ futures. This is up almost 4% pre-market. So it's safe to say the market is going to be kind of amazing today. And that's because China and the US agree to slash tariffs for 90 days. And so the market is going to go crazy. And this is why I'm always talking about don't try to time the market. Don't try, just if it's making you stressed out, dollar cost average and log off the app. I've been saying that now for like the past 2 months. Dollar cost average, research the stocks and funds that you have, believe in them long term, and log off the app. And when you do that, you'll keep your mind, right? But also, if the market does turn around or if there's some news release like over the weekend, like this was, you'll be able to reap those benefits. So everything is up. You see up here, Nvidia, Best Buy, Tesla, Amazon, everything is up pre-market. So I wanted to make sure that I just point that out first because wow, that's crazy. But we do like DGRO, just to answer the question. And I am here on stock analysis. If you've been here for a minute, you know this is my favorite website to research. If you are a beginner investor, if you are an investor, period, you should be researching the companies and funds that you are buying into. Don't just blindly follow me or anyone else because I'm not a financial advisor. I am an investor, right? I'm here showing the account, right? Documenting the journey. But still, you want to make sure you know what you own and why you own it, because if the markets fall, like they were back in March and April, you can still hold on for the long term. But simply put, DGRO is the iShares Core Dividend Growth ETF. This is a BlackRock owned and created fund. Okay, they are the investment firm, the broker behind DGRO. Like with SCHD, Schwab is the broker or investment firm behind that one. VTI, Vanguard, is the investment firm behind that one. FXAIX, Fidelity, is the investment firm behind that one. So I just wanted to say that. But if you come to this website, again, to the person who asked me this question, this is great for research right here because it's super easy, super beginner friendly. You can see a lot of the fun information here, like trading prices, history, and all of that. But one of the things that I love about DGRO is that it's focused on growth. So SCHD is focused more on income. So they'll have like a lot of blue chip, value-based companies. They don't have a lot of technology in SCHD. Actually, let me come over here. You see this little tab comparison tool? I'm going to click on that and I'm going to compare, just to make things easier, DGRO and SCHD, because I think it'd be easier to have a visual as I'm, talking about this. So you can see the performance here over the past 5 years. I think 5 years is a great gauge to kind of look and project when it comes to your investing. 5 years in the past, if you did not know. So this orange line is SCHD. The blue line is DGRO. One return, so SCHD the past 5 years, DGRO the past 5 years returned about 87.90%. SCHD the past 5 years, because it's the orange one, returned 81.04%. Both are great. We own both because SCHD is more for income, DGRO is more for growth. And if I come down here, you get to see some more comparison right here. So DGRO has over $30 billion in assets, which is great. A lot of good companies inside of it, more on the tech. SCHD has over 66 billion assets that make up that particular fund. And again, it's more value-based blue chip companies that, really perform well, even when the markets are kind of, a little bit crazy. You can see if I click on price, you can see the price here. Now, SCHD did do a split. So that's the reason why it's about $65. I think before the split, it was around, what, $70 or so, give or take a couple bucks. And DGRO's at about $60.52. But again, this is pre-market. Everything is up pre-market right now. So yeah. And then if I come here, you can see the past 52 weeks. You can see the change, the high. So you can see the 52-week high right here. And then the low, again, this is factoring in the split. So just keep that in mind that it's adjusted for the split. That's why that number is a little bit higher. When it comes to the dividends, you can see right here, DGRO for the year pays, you can see right here, $1.39. The yield is 2.29%. SCHD is $1.04, and the yield is about 4.04%. But the growth is greater on SCHD, again, because it's more for income. DGRO is more for growth. People like to have both, and that's the main reason why we had both as well. They both are quarterly paying. So you can see right here, the most recent ex-dividend date, DGRO was March 18th. SCHD was March 26th. If I come down here to the holdings, you see right here, the top 25 holdings. Again, you can see more of what I was saying earlier about more tech. So DGRO has Microsoft. You can see right there. Let's see, Broadcom, Apple, which is in there. But if you look over here in SCHD, you don't see Broadcom, you don't see Apple, you don't see Microsoft or anything like that. But you see like Verizon, Coca-Cola, Altria, which we do own. You see Lockheed Martin, Home Depot, AbbVie. So again, companies that, again, are more blue chip, they don't get a lot of volatility, in my opinion, whereas Apple does. Definitely Broadcom does as well, but they both are great. Again, growth and income. That is why we like both of these. If I come over here to our position in Robinhood, we do have DGRO over here. Like look at this. It's up over 2% pre-market. So again, these numbers may be higher once you see this video, but again, I just wanted to point it out. So you can see our position here. Our average cost is $52.96. We have about 125.47 shares. Ideally, the next goal is about 150. We are not in a rush to do this. Just slow and steady. That's my same message, right? That I say all the time. It's slow and steady, wins the race, a couple of dollars when you can. That's why fractional shares are amazing, is because you can put 10 bucks, 20 bucks, 50 bucks even into some of these positions, and you don't have to worry about trying to invest hundreds or thousands of dollars if you don't have it, because again, expenses are up, things are high, inflation is a real thing. And but you don't want to not be in the market. That's the whole point of this video. That's the whole point of my channel. You don't want to be not in the market. You want to be investing something. You can see, look at this, our total return, 16.64%. Crazy. You can see our market value. So the total value of our DGRO position here is $7,751.72. Again, if I come down to, let me see, year to date on this position, we're up. You can see like this dip right here back in April was at, I think, what was that? $55.22. So if you bought back at that dip, you should see a gain in your portfolio. And again, you can see that the dips are coming back just year to date. So that's amazing to see. That's why I'm glad we've been dollar cost averaging and just continuing to buy and hold when necessary. We also do own SCHD in a couple of accounts. I'll show you in this one specifically. We do have a much larger SCHD position in Interactive Brokers. Again, check out a lot of my previous videos. I share that there. It's about 50,000, give or take a couple dollars in each direction, because the market goes up and it goes down. But in this particular portfolio, we've been building it since October from scratch with small amounts of money. I've been documenting this on this channel so you can see that it does work, okay? And you can see this position right here is our average cost is $26.39. We have 25.90 shares, but we are down, but look, barely. When the market opens, we will probably be in the green with this position finally for the first time, because we've been buying this during all these dips, like you see here today, we've been buying. Even when it was crashing down here, I made a couple of videos about it, still buying, okay? And just to see that, is if I go back to the day, it's up pre-market about 1.79%, which is amazing. And just to see like we're about to break even on this, and it'll be so exciting when we get to our first $1,000 in this position since October of 2024, just building it up from scratch. So thank you to all of you who've been watching me, like really staying connected to this strategy that I've been doing. Small amounts of money, again, because you don't know when the market is going to come back, and you don't want to be left behind when, look at this, the market comes back and now the Dow is up. Look at this, pre-market over 1,000 points, or the S&P 500 up almost 200 points, or the Nasdaq is, look at this, the Nasdaq is going to be crazy today. It's going to be crazy today. So all of us with our 401ks and our Roth and HSAs, or at least that's what my husband and I have, in addition to the brokerage accounts, we're going to be kind of cheesing today. We're going to be smiling really, really pretty. So again, guys, let me know down below if you do own DGRO. Let me just come back to DGRO. Let me know if you do own it. Do you like it? I really like it. Again, I like it for growth, and I like SCHD for income, and I like both of them. So we have both of them. So, I figure why choose when I can have a little bit of each. So again, let me know what you guys think. Again, I'll leave stock analysis, the link down below, and I'll leave, I guess, a link to CNBC, but it's just cnbc.com. I'll leave that down below as well. Again, thank you so much for watching, and make sure you like, share, and subscribe, and I will see you in the next video. Bye-bye.